I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews, we have with us Matt O'Connor, co-founder of Legion. Matty, welcome to the show, and thank you for taking the time.
Thanks for having me, Ashton.
Very welcome. Excited to dive into Web3 fundraising, how that all can go down in the best possible way, and hopefully lowering the barriers to entry for more people to be able to invest in great projects that are innovating in the crypto space. I'd love to start off with just sort of a high-level overview of what you and your team have built at Legion, and then we can discuss all of those details.
Cool. Yeah, awesome. At a high level, Legion's a platform for teams to do fundraising from retail investors in their community, and that's both liquid token sales, so ICOs, TGEs, right, the actual generation of the token, or before tokens, so pre-liquid rounds similar to a SAFT mechanism. We view ourselves as kind of removing the two biggest blockers to doing public token sales. One is regulatory risk. So we take a route where we're compliant with this new regulation in the EU, markets and crypto assets, right, MiCA. And the other is concern around investor quality, right? When you're raising from angels or VCs, you know who you're working with. When you're doing a more public sale, you don't know if these wallets are Sybils, if they're bots, if they're people you even want to be working with in the first place. And so we also have a whole reputation system built out. So again, the primary benefit here is teams can now compliantly raise, tokens, funds, selling their token publicly, and get their token into the hands of the right people.
Mm-hmm. I think it's great to have a platform that allows more easy access to fundraising because there are a lot of great projects out there. It's just about doing it in the right way. I'm curious on your background, how did you get into creating a platform to help fundraise? Was it just through your personal interest in investing or are you trying to solve some specific problems?
I think a combination of both, to be honest. Some of my, personal favorite memories of crypto were back in the 2017 days, right? The ICO craze, participating in those. And it was just it was an electric, exciting time to be in the space. There was so much happening. People had this sense of optimism of being able to get in at the ground floor. And you do see, a lot of the major projects today can trace their roots, and especially the root of their kind of cult following or the community back to their ICO, right? Like Chainlink, Ethereum Maxis, right? Solana ICO, Thorchads, Degen Spartan, right? Came out of the ICO. So I think that era was a very interesting and exciting era for me personally. Combine that with also in the past few years, I've been working in Web3, mainly in a token design, parameter optimization, mechanism design type of roles. For Stacks Foundation, for example, top 50 project by market cap, Bitcoin L2. For Status, one of the first ICOs in Ethereum. And for a bunch of projects, just as an angel investor or advisor. And so given a lot of thought to helping teams build the right product, helping them design the best token, but then going that last mile of getting the token into the hands of the right people still feels like a gap. And so for me personally, this is like, let's solve that problem. And it's also a way to work on one of the aspects that I'm most excited about and I think is most fun in the space.
Definitely. And 2017 was definitely a good time for those projects that you mentioned. A lot of them are still around as multi-billion-dollar market caps, and being able to get in at the ICO stage, obviously there'd be a great return there. So, and I'm guessing, everyone's still looking for the next Solana or the next Thorchain, and usually they come through platforms like Legion where nobody knows how successful you're going to be until it's already happened. And
sure.
They often struggle to close fundraising in a easy way. That even the great Web2 companies, Microsoft, Apple, were rejected by hundreds of investors who now regret it. But having access to more information about those projects on something like Legion, I feel like would be very beneficial. So can you talk a little bit more about how exactly that process works? How do you determine who can fundraise? What does the project have to do? Or how can they qualify to be on the Legion for fundraising?
Yeah, it's a great question because, we just cited some of the great successes of the ICO era. And it's important to remember that, of course, not every ICO was a success, and there were, neither was the whole era perfect, right? There were drawbacks, and one of the main drawbacks was due to the fully permissionlessness of the system. There were tons of scams, right? Just tons of projects that were launching intentionally ripping people off. Projects that kind of maybe started with good intentions, but then raised like way too much money. And it's like, if you raise $100 million overnight pre-product, are you really going to go and bother building out a product for 10 years? Or are you just going to, give into the temptation of retiring? A lot of teams unfortunately did. So what I'm talking about this to set the context of, like, there's elements of the ICO era that we want to get back to, the early access for people, right? The involvement of community, bootstrapping those elements. But I think there's risks or excesses that we also need to pull in, right? And so one of those comes from the regulation that I referred to earlier, right? Like MiCA, our compliance there. The rules that MiCA has for public token offerings are largely around risk disclosures, largely around transparency, making sure people understand what they're actually getting into, making sure that the white paper accurately reflects reality, right? Like you had in the earlier days, a lot of white papers that were just made up or lies or didn't really reflect, even things as simple as, like, how is the treasury secured, right? Is that a multi-sig, or is it just one intern with a key that, you could lose everything you just purchased? So simple risk disclosures, not perfect, but go a long way. And then the other element is, we are intentionally not going a fully permissionless system route. We are not saying anyone and everyone can immediately launch on Legion and raise a bunch of money. We are screening those projects. And of course, that comes with a trade-off, right? Of like, who is then screening them? We take the approach of, we don't think the community is going to entirely replace VCs, right? We think that good VCs, and I don't mean like tier 2, tier 3, tier 4, VCs who are just there to, like, they just got some money together and all they're looking to do is make an investment and dump tokens. So talking about the top quality VCs, they can add value in ways that maybe the community can't, right? Whether that's B2B introductions to other companies in their portfolio, SEX introductions, right, to centralized exchanges, market makers, pattern recognition of seeing all these things. They do add value. We're saying the community adds a different type of value, and that you should get both, right? The community can add product feedback at scale, right? Product evangelism. And so when you raise from both the tier 1 VC and your community in the same round at the same valuation, that's ideal. And so why I mentioned that point is that we are taking the approach of, let's try to co-invest with the best VCs out there. And it's not that we're not doing due diligence. We, of course, are doing our own due diligence, but we're also like we are using what other investors do as kind of a qualification or a signal that this is a project to pay more attention to. So again, it's not like a hard requirement, and we do want to decentralize over time and how we kind of screen those initial projects. But it is a difficult problem, because you can't just pull, like, the average person is probably not going to have the best, insight on, is this project going to do better than the average, right? You have to be both right and contrarian to kind of get an edge in early investing, which I think Tushar of Multicoin, I think, says that, which I think is a great way to phrase it.
Yeah, I think that's a great point about having the community there. You need a community, but you also really would benefit from VC and high-level connections to get things done. It's
Yes.
possible with some of these meme coins that are fully decentralized and they're just driven purely off of community, but may
Right.
not be always as practical. Starting from scratch, saying we're just going to use the community. We don't want VC funding. And we're trying to build a product that's going to connect to all these different businesses, but we're just going to do it the hard way in trying to make connections. So, but on the other hand, normally there's some level of when a project already gets funding from a tier 1 VC, they're not always necessarily coming to a platform to say, hey, can you help us fundraise? Because they already have VC funding, and maybe those other tier 2, tier 3 investors they follow that tier 1 investment and they say, they just invested there, let's go there as well. And then they don't necessarily need community funding. So where does that lie in how Legion can play a role in finding a good project that already has VC funding, but still wants to get involvement from the community?
Yeah, it's a great question, because you do need to align the incentives of all parties for this really to make sense, right? Like if founders don't want to sell tokens to the public and raise from the community, they're not going to, right? It's as simple as that. They're going to, if they prefer to raise only from VCs or keep raising from only angels, that's what they're going to do. Similarly, if VCs, are thinking it's in their best interest to push out the community and prevent teams from raising from the community, which some VCs have in the past, arguably before there's been a bit more regulatory clarity now, they're going to pressure founders to do that, right? And so you really need to align the incentives for all parties for this to make sense. And that's why we've gone the approach we have of the regulatory compliance and the investor reputation, because we think that the top quality projects that already have the option of raising from tier 1 VCs, it isn't a good risk reward profile for them to say, you know what, raise from the public, but you might need to spend the next 3 years spending all that money you just raised on an army of lawyers defending yourself, and tons of distractions and tons of noise. And, like, who knows if you'll get shut down or not. That doesn't make any sense for a team that can already get access to capital, right? So to work with the higher quality teams, we see it as a prerequisite to go a regulatory compliant path so that they don't have that risk. And then similarly, we need to also make it high confidence that raising from their community is value add, right? Is value add in a way that their VCs aren't adding value, and that means knowing that the addresses you're selling tokens to are not bots, are not Sybils, right? Are not just farmers, are not going to dump the token immediately 2 days later. And so that's again where this reputation scoring comes into play, where it makes it a lot sure everything that can be gamed will be gamed. Like it's impossible to make something 100% exploit resistant, but what we have done is make it a lot more difficult, a lot more time consuming, a lot more expensive to maintain like high quality aspects of all these categories that we score in the reputation. And that makes it much, much, much more difficult for Sybil farmers to have like a bunch of accounts. And so you get overall higher quality set of addresses that are investing in you, higher signal. You're maximizing the value add per investment or tokens that you're selling. And so that makes it a win for projects, and it's also a win for their VCs, because the VCs are now investing in projects that actually have meaningful community traction, adoption, right? And obviously it's a win for the community because they're getting access they wouldn't otherwise have. Without making everyone's incentives aligned, this doesn't really work.
Mm-hmm. I'd love to take a look at the current market status of crypto right now. Obviously, we're seeing new all-time highs for Bitcoin, a lot of interest in other coins that are already listed.
Yep.
What is the status on fundraising for coins pre-token platforms or ICOs? Is there a lot of interest right now, and how is Legion doing with that in the current status of the market today?
Yeah, the short answer is there is a lot of interest. I mean, we're talking with a lot of big name projects, projects that want to do raises on Legion. So it's been a positive to see all the projects that are realizing that this low float, high FTV, excluding the community kind of approach doesn't work in the long term. It can work for the short term for some big insiders, but largely doesn't even work for the team because their tokens are vesting over a long period of time. So positive sign is seeing teams recognize the importance of this. I would say, we've been in a market cycle where private market valuations have been driven up, have been kind of bloated by all these VCs, many of which are definitely not the top quality ones. And so you get these launches at massively inflated valuations with very little community. I like to call them capital rich but community poor type of projects. And then it's just like token down, right? And so I think we are seeing a shift of realignment of valuations in the secondary market, right? Of liquid tokens with private markets, where some of the projects that have launched recently are overvalued, and so they're coming back down to more liquid. And meanwhile, you have some of these established projects that have maybe been oversold in the liquid space coming back up. And so that's part of the reason why at Legion we're seeing projects recognize this and take this so seriously and come to Legion and do an offering or a public token sale at the same valuation that VCs are getting, or even a discount to what VCs paid. So it's promising, and I think that not everyone's taking it seriously, but many are.
Uh-huh. On the community side, I think you need a great balance of quality community members and quantity as well is nice. Is there any threshold on Legion for the amount of community members that invest, or the amount that they invest? Can somebody put in $10? Can they put in $10,000? Does that depend on which project?
Yeah, it really depends on the project. There's no hard requirements on a min or max, but for practical reasons, right? As a project, you might want to set a $500 or even $1,000 kind of minimum for a purchase. So it's up to the project. It's customizable. What we like to suggest to teams is a balance where you have, these are just example numbers, but maybe anyone can invest up to, maybe it's a high demand round, so anyone can invest up to $5,000 in the round, right? And so if you've KYC'd, you pass some very minimal kind of reputation checks, anyone can get involved. But depending on what the project values, maybe they really want early users of Pendle with a high social following, right? Or developers in the Solana ecosystem, right, that have worked on these types of projects, right? The nice thing about our reputation system is that projects can find the people that meet those criteria and say, you know what, you can actually purchase up to $10,000 or $20,000 worth of tokens, right? So you get both. You get this spread of anyone can get involved, and you get high signal people involved as well.
Wow, that's really interesting on the qualitative side, being able to find users that are have experience with a specific blockchain or with a history in DeFi. I actually haven't heard of that before.
Yeah, I think it's slowly becoming a narrative, and I think that'll be like the next meta, is more intelligent ways to distribute your token, right? Because we've seen time and time again that just like blindly giving out the token in an airdrop, right, to all addresses, and just things are botted, things are sybiled, they just dump immediately, and it doesn't actually translate into retained community or users.
And on the quantity side, are you guys seeing a ramp up because of the market conditions right now? Do you put a limit on how many concurrent investments are available to people? Is there a sweet spot for that for Legion?
Yeah, so we actually just opened up signups on the investor side. So investors, users can come sign up to the platform, generate their reputation score, complete KYC, wait for the next deals to come online. And we just did that a couple weeks ago, actually. And so we've already gotten over 14,000 signups. It's been very positive. But we, when we do kick off the first sales, it should be quite soon. Stay tuned. We're targeting like for the first maybe 5 or 6 sales on a clip of like 1 a week, right? Not trying to overlap too much. Get those having attention, and then early next year, once we've done that, the first sales, we might scale up from there, get more frequent. But I think that's what we're comfortable with for the time being. Making sure that everything is going as planned.
That's good to know. I think that's a good amount of time between sales to make sure that they get their chance in the spotlight for being on the platform. Is there any specific use case industries or types of projects that you're seeing more or that you're interested in investing in? Because there's so many use cases, all of the industries. What is the kind of things, excuse me, what are the kind of things that you're seeing come to Legion?
Yeah, we're seeing across the board. I mean, there's no one vertical we work with. There's no verticals we rule out per se. But we do see what you'd expect. Most of the projects in infrastructure, DePIN, DeFi, some social media plays, some gaming. We are leaning towards the more kind of proven ones for now, right? Like that's part of our vetting process, right? Is taking this lens of, is this a good opportunity for purchasing tokens? If we were our users, right, putting ourselves in our users' shoes, and that's actually part of how we make revenues in the tokens that are being sold. So we do have an incentive to kind of work with the right projects. But again, there's no single vertical we're focusing on, and nothing we're hard exclusion. There's definitely ones we see more of, but I think that's just more of a nature of the market than of us per se.
Mm-hmm. Well, I'm looking forward to checking out these first listings. Is there any deadline for that, and can people sign up right now, or can they do it on, if they see there's a listing, can they do it on the day of? How can people get involved in the participation of it?
Yeah, so visit our website, sign up, create a profile, generate your Legion score. That alone already, gets you on the leaderboard. You can join some chat rooms based on your score, so you get access like other alpha, right? People with similar scores. And then the first sales will be coming out in a matter of weeks. You can also complete KYC at this point. So you can sign up, generate your score, complete KYC. People eligible to see the sales will get notified, get emails. You can sign up for those notifications. We're going to be rolling out, I think, Telegram notifications as well soon. And so there's multiple ways to stay up to date. Of course, we'll be talking about what we can talk about, at least publicly, on our Twitter as well. There's always some regulatory constraints around those sorts of things, but certainly like email is a proven channel. So if you're on our email list, if you've signed up, you will be notified when sales go live.
Mm-hmm. No, that's great to know, because I know, especially when there's a quality project, if you sleep on it, it will be sold out over capacity in minutes or seconds, as you've seen probably many times in the 2017 era. Some of those sales, once they realize that they had a bit of VC funding, this is a good project, the community round opens. If you're not there, it's gone.
Right. Yeah, exactly. So, and there's different sale mechanisms. We have like all the funding happens on chain. So we have smart contracts that are audited in both EVM and SVM for a variety of sale mechanisms, a fixed price sale, a clearing price auction, for example. So we're excited. I mean, it used to be much more normal back in those days to do things like auction-based, price discovery. I think it's kind of fallen out of favor as VC rounds have become more the norm. We're excited to get a little bit back to that, where maybe it's not as much just there's a fixed, because when you see a sale like that's fixed price sell out in like 3 minutes, that's a good sign that maybe the valuation wasn't driven by the market, right? Mm-hmm. And so I'm excited about these a return to some of these more like market price discovery mechanisms like auctions that I think are viable when you have a large group of people that are interested in the project.
Very cool. I'm looking forward to checking it out. I will leave a link to the Legion platform and the socials that you mentioned in the show notes below as well. Appreciate your insights into the current status of fundraising in Web3, Maddie, and all the best with everything on Legion and fundraising moving forward. I'd love to follow up in the near future.
Thank you very much, Ashton. Appreciate it.